Hey everyone, Bob Gavlak here with our second quarter of 2020 review. And what I'm going to do is this is going to be part of an email that'll have some commentary from us. And I'll also be attaching this actual market review to the email. But as you guys know, I like to talk through it a little bit just to put some high level points out there and give some context for some of the things that we're looking at, we're thinking about, or honestly, just that I find interesting. So just want to walk through this with you guys. It's the same stuff that we get every quarter. Big thing, no surprise here, is that across the board, the market was phenomenal last quarter. And what our commentary talks about this quarter here is actually about how it can be a disconnect between market returns and all the bad news we're hearing about the economy, GDP, all kinds of stuff like that. So I encourage you to read the rest of the commentary. But it's no surprise that the markets did incredibly well, regardless of what area you were invested in. And actually, in the US stock market, you can see this best quarter since January 2001. I think it even goes back all the way to 1998. It's the best quarter that we've had. But that's why we stay invested. That's why we, did a lot of things to get back in the market or stay in the market for our clients. Didn't know if it was going to be this sharp of a V, but it ended up being a pretty sharp V. So just some interesting commentary or thoughts and graphs here. If we look long term, the other thing I want to harp on again, and I know I'm probably sounding like a broken record here, but if we look at the long term returns of US stock market, international emerging markets, and global real estate, we can see, let's look at the 10-year number, for example. 10-year average annualized rate of return in the US stock market, international and emerging markets are at about 2% each. Now, historical rates of return are international, are more in line generally with US domestic. Emerging markets, they're a lot more volatile, but tend to have slightly higher rates of return over long enough periods of time. Um, we really think that there's an opportunity for reversion to the mean here, right? Just getting to a point where 10 and 5-year numbers of trailing returns are more in line with historical averages. So making sure that we're staying focused on our international and emerging market equity exposure is going to be an important consideration going forward, right? We can't only invest in things that have been successful over the past 5 or 10 years. We need to make sure that we maintain discipline, maintain diversification, so that long term we're able to, when this flips, right, when this 13.72 flips from the US stock market to international, we want to make sure that we're being a part of that. Okay, so just keep that in the back of your mind, consideration. A couple other charts here that I really like, some world stock market performance, but really the one I wanted to touch on is this one here, stock market performance in the short term. This is basically going back to the Q3 2019 through the end of Q2 2020. We can see this sharp decline, but all kinds of bad news, good news, all this stuff that's happening here. But my favorite one here is talking about all the drops and records and everything like that. And then right here at the end, U.S. stocks close out best quarter since 1998, right? Like, it's just, to me, the fact that we went through so much turmoil in a short period of time and then came out of it, those people that kind of stuck with it or had a plan put in place, whatever it might be, to participate in the best quarter since 1998, it's good to see, but also it makes sure that we maintain a long view of things instead of getting caught up in the short-term fluctuations and news. A lot of other interesting statistics and insights here as you go through. You can work through this on your own. Again, this is part of the email that you have for yourself. The other thing I want to touch on, the last interesting point, kind of high level for you guys, is just how much large cap value underperformed some of the other sectors over this past quarter. So large value, that's generally going to be your large cap dividend paying value stocks, right? So if we think of the Procter and Gambles of the world type of stocks, Coca-Cola's, Pepsi, whatever it might be, those are the large value stocks, and they didn't do nearly as well as the growth side of things did. And you know, it's been fun to see and fun to participate for those that have participated in the growth side of things. If you've been invested in Amazon or Tesla or Netflix or anything like that, Shopify, right? You've seen some great returns. But long term, both from a rate of return perspective and also from a reduction in volatility perspective, large value, or I won't say large value, I'll say value stocks in general outperform over the long term. So again, we need to make sure that we're not using recency bias to say, hey, growth is better, so we should lean more towards growth. Tech is better, so we should lean more towards tech, right? It should be forward looking in our considerations and make sure we take that into account when it comes to building an investment strategy. So, again, all kinds of interesting stuff in here. You guys can work through this. If you have any questions, you can, of course, reach out to us and say, hey, Bob, or hey, Patrick, or hey, whoever it is, right, on the team. More than happy to talk through it with you. There's also some additional commentary and some insights here at the end of this, so make sure you go all the way through to the end. But again, just wanted to walk through this with you guys, give you some insights, some high level viewpoints, and just add a little bit of additional context to the market commentary that we send out in the written form. So again, thank you all so much for your trust. Thank you all so much for being part of our family, and if you have any other questions, feel free to reach out. Thanks and take care.